Mid of the week, another market briefing, another live analysis from HFM. So we are in the actually today's the second day for Mr. Powell's testimony, and as you might have seen yesterday, it was the key and main driver of the market. Yes, since yesterday, and it remains actually is still, even though we've seen some consolidation throughout the day, but this just presents some kind of a consolidation of cautiousness ahead of the second day of his speech. So before we go through the charts, I would like to remind you that other than Mr. Powell, another two significant events that we're expecting today is also the ADP number, which, as I keep saying, is an indicator of what might happen on Friday, on the when the NFP payrolls will be released from the US, and also we have Bank of Canada rate decision and statement. It's the exactly yes, it's the same. Yes, it's the exact the same time as Mr. Powell, so that will be interesting. Unless if Bank of Canada doesn't release a price and keeps the rates unchanged as is widely expected. So, hello Daniel, hello Edward. So, guys, I'm gonna just minimize myself a bit. Emma, as usual, Dow Jones and S&P in a 4-hour chart, and this is what I have over here. I decided to show you with the Dow Jones firstly because, okay, just to brief you up a bit about what we have seen since yesterday. We have seen a massive sell-off in the US indices, in stock market in general, with only exception to be Nikkei, if I'm not mistaken. And this is, guys, is what the Mr. Powell's statement, or this hawkish stance, the fact that the statement signals further aggressive tightness is what is responsible for adding significant pressure on the stocks, on metals like gold, oil as well, with the biggest gainer to be the dollar. Okay, this is what we have seen since yesterday. Nearly all the major assets, for example, USA 30 over here. This is Nasdaq. They found a bit of a floor. Okay, so far today, actually, since the Asia session. But as I said, let's not forget that in 3 hours from now, we're gonna have Mr. Powell again on stage for his second day testimony to the Congress, and that might explain this floor and the slight rebound that we have seen in the US major indices. So, my dear Emma, since you are always on time and the very first person asking for questions, I will analyze right now the Dow Jones and the S&P 500 in a 4-hour chart. So let's start with the S&P 500. First of all, I'd like to remind you, this is a daily chart, by the way. I would like to remind you that it was moving in this long-term down channel since September. This channel, as we have seen in our previous live analysis, has been broken, and currently the asset is outside and above this channel. Hello, Harry. Hello, Mohammed, and Yusuf. So the upper trend line of this channel now is from resistance, has it turned into a support level. So the 3900s and 3870 now is a key support for S&P 500. I will zoom in into the 4-hour chart as Emma asked, and I would like to turn your attention to this floor over here. Okay, it's the 3900s territory, 3922 to be more precise. And I forgot to connect GTW. I will steer it absolutely right. Yes, give me a second, guys. I forgot to enable an extra channel that we have, the one that we had 192 registers actually today. So I'd like to apologize to those people. Okay, guys, give me a second, okay? Give me a second to go to enable also to start the GoToWebinar as well session. Okay, it's time. Come on, come on, come on. Okay. We are live also in the GoToWebinar. To the attendees of GoToWebinar, my apologies. I need to put the headset on. So hopefully you can hear me. Yes. For those that they have joined us through the GoToWebinar, guys, I'm here. I didn't start on time. Sorry for that, but you haven't missed a lot. We have just started and we are started with analyzing S&P 500. Okay, anything you need, guys, stick your question, your comment, your asset in the question box. And for the people that are in our social media, watching us via social media, don't forget that any comment, anything you want to ask, just add your comment below and I will reply as soon as possible. Yes, okay, so perfect. So that is, by the way, this highlighted area in the S&P 500 4-hour chart, the 3900, and more precisely 3922. It was the very first support of the year, our very first support of the year when we created our yearly outlook. And as you can see, it has been kept as a nice floor since the beginning of the year. You see, we tested over here. We had a rebound, a reversal back, didn't broke it and rebound again away from it. So 39.22 remains a key resistance area for S&P 500 in the near term as well, since we're in a 4-hour chart right now. So we have this rounding top, which theoretically is a bearish pattern, but it hasn't been confirmed. It has rebounded with the asset retesting once again the 4,000 before it pulled back. I will zoom in a bit, okay? And I would like to just disconnect the lows just to notify any potential or any breakout back to the downside ahead of Mr. Powell, during Mr. Powell's statement, who knows. But this will give you an immediate support level to spot any pullback and any increasing bearish bias to the within the day to the S&P 500. So these along with this significant 39.22 territory that I just spoke about, and this pink line that I have drawn by connecting the lows on this latest rebound are considered to be our immediate support levels for S&P 500. While to the upside, the failure to extend above 4,000 and the pullback below it proves once again how strong this resistance level is. So my dear Emma, I'll zoom out a bit. Despite the fact that the stocks have been seen in a the audio is good. So despite the breakout that we have seen on this bear market that we've seen for more than a year, the stock market and the S&P 500 that we are talking about hasn't exited the long-term bear market, guys. Okay, so indeed we have this picture over here which presents that it exited the bearish channel, the long-term channel that we have seen, but we don't have any confirmation yet whether the stocks have actually breached their bottom and there is no longer any further steam to the downside. Okay, so it's just for you to have in your in the back of your just a note for the next few weeks or even the next few months. So for the time being, this around the top, as I mentioned earlier, hasn't been confirmed. So there is a nice strong support for the stocks. Okay, even though there is an increasing bearish bias, you can see that. You can see that for. Let me just stick in my. There it is. Okay, you can see that from MACD. No, you can't. Let me just zoom out so you can see. Yes, so momentum is still negative. Ahead of the data today, ahead of Mr. Powell, you need to keep an eye on the lines that I have just presented you. Connect your lows, have a line on the 3922, connect the lows, and also highlight the 4,000 territory. Okay, this is the analysis for the daily and 4-hour chart that we have just seen after Emma asked for it. 50% Fibonacci level, pivot point as well, and an area that is that it fell to, it was a peak, but it failed to be sustained. So two key support levels and a single resistance level. Now, I will move into 1-hour chart because we have people here prefer to scalp or be in a faster environment, etc. So look at that, guys. It's looking like a head and shoulders, not an ideal one, but we had a shoulder one, head, shoulder two, neckline was over here, it broke it significantly, dipped over here, and is held since then over here. But what my indicators are telling me, RSI indeed recovered, but it's still at 55. That is not really, it doesn't really show that bulls are back and they're pushing the market higher. No, it's close to neutral zone. It's at 56. MACD is way below zero, extremely negative, even though it corrected a bit, is way below zero. So that, my dear friends, means that the bears are still in control, and this slight recovery that we might see, it might be closing, locking some profits, and due to the anticipation of the Fed, just pause a bit and wait until the events are out. This is pretty much it. The same, my dear Emma, the same stands for S&P for Dow Jones. I'm afraid, guys, I will have to do the same analysis for all the 3 major indices because what dominates today, and it should be for the whole week, but I will not say big words because we have an FP on Friday, so that will drive the attention significantly because it's inflation, core inflation next week, and NFP this week on Friday. It will be the excuse that Fed needs in order to support what he said yesterday. To support that, you know what, I will stay higher for longer. I will keep increasing rates as aggressive if I can until I reach the 2% inflation rate. So more the interest rates, lower the stocks, higher the dollar, lower the gold, higher the yields, lower the bonds. Okay, are you with me? So if we consider that the Fed will meet and actually deliver these interest rate hikes or these expected interest rate hikes, um, that will happen on the 22nd of March. So we have nearly 2 weeks until then. So since we have seen the market already pricing in, and by mean the market, you guys, all the market participants started trading on the expectation that the Fed will increase rates once again, and not by 25, but actually 50 points. That is what can what could keep stocks under pressure for the rest of the week. That's why, even if you're scalpers, okay, 30 minutes chart, 15 minutes chart, is the same for you guys. You need to consider the fundamentals. Why? Okay, this is the 30 minutes, sorry, 15 minutes chart. Okay, I will add my little, no, that's not good. I will add my channel consolidation. Okay, consolidation. That's a much better one. Oh, that's a tighter one. No, I don't want this. No, we'll want a wider one just to give me some immediate support and resistance level. So this is 15 minutes chart Dow Jones, okay? I want an even more wider one because I want to catch once it exits. Okay, that's good. 15-minute chart Dow Jones. So even if you're scalpers, if you like 15 minutes chart, 5-minute chart, 30-minute chart, you can still use your technical analysis. You can still consider. First of all, you need to keep an eye on the calendar because the time flies. We're gonna eventually have Mr. Powell out and etc. So it was ranging S&P, Dow Jones ranging sideways within this range. So guys, if I zoom in, you can see that a breakout. I use two regression channels. Okay, two regression channels. So you can understand that if you've seen your asset breaking above this area, so the area between my first channel and the second channel, the one is a normal a normal regression channel, and the blue one is a standard deviation with three standard deviation points. Okay, so a break above the gap between these two regression channels, so 32944 could indicate further upwards movement up to 33,000. Okay, it used to be support, now it's turning to resistance. If we see our asset turning down, breaking my lower support over here, so this again, this area between my two channels, so that should be somewhere around, come on, 32,830. That could just signal that this big sell-off that we have seen since yesterday might resume. So you need to keep an eye on it, okay? And you might need to go as high as the 1 hour chart in order to, if sell-off starts and it breaks that area that we have just mentioned, the 32,800, if it breaks, okay, if it breaks that bottom, that then you need to find the next support areas, which are back in the beginning of March, okay, 1st of March to be more precise. So 32,680 is the very first one. The next one is down to 32,580. So this is for scalpers, 15 minutes traders, 30 minutes traders, okay. Technical analysis, risk management. Is today ADP employment change a precursor to precursor? I cannot pronounce that word for some reason. Sorry. Yes, for NFP. Yes, it is. Okay. Lately has lost a bit his the significant correlation that the ADP is considered to be an indicator on for the NFP. Lately, to the last 2 years, he has lost his strong correlation, but it's still an indicator on what might happen on Friday. But it's not only that, just shows the jobless claims, the weekly jobless claims. So ADP today, my dear, and this very good question, dear Steve. Let me just check my calendar to see the expectations in general. Where's the, I have it written down somewhere. Don't forget that labor market in US is still very, very high. Softer a bit, but not significantly. It's very, very tight still. And considering the jobless claims that we have seen, I mean, it's something that we're seeing every week, right? So considering the jobless rate that is still quite high, at 3.5, I mean, so we still have jobless claims supporting that labor market is still strong, so more jobs are opening, and etc. ADP is expected by analysts is expected to climb to show around 215,000 private payroll increase. If something like that, if indeed they come in line with the expectation, ADP comes in line with the expectations, or even surprise, or even comes higher than what is expected, that could mean that NFP might come as a massive one once again. So big number. If we've seen once again ADP increasing, that could mean NFP will be once again high, and that is just adding to the scenario that Fed needs to increase further interest rates. And just to remind you that last month on January, the ADP was massive. Okay, it was massive, and that indeed it proved that the NFP in January was also a big one. It was at 500,000 new jobs in January. This month, for February, we're expecting the half. We're expecting 240 new jobs. But if ADP once again massively undershoots the expectations, that means that NFP could be massive as well. So what that means for the markets, dear Steve, this is what we're asking. Markets will could fully price in if what I mentioned happens. ADP becomes higher, so NFP comes higher, shows again that it's a tight labor market, that new jobs are coming regardless the recession, during the time of a really high inflation in the US. So all this will just push the market participants to price in the 50-point rate hikes for March, maybe another 50 in April, and so on and so forth. So more aggressive tightening for the Fed. We have already seen since yesterday the markets turning on that direction, but now the odds could increase if all this scenario happen. And what that means in the market? Further strength of dollar, further decline on stocks, further pressure on gold, further pressure on bonds, higher yields, wider curve inversion, and etc. Okay, obviously we need to we need to see the data before we take any action. Okay, so after all these fundamental analysis that I have done, check your charts, add your support and resistance levels, write down the assets that you are mostly interested in, the ones that might be very close to your support and resistance level, the ones that you might have seen a head and shoulders or a rounding bottom or a cross of golden cross of 50 and 200 period EMA, etc. In order to be ready once ADP is out, once Mr. Powell is out, once NFP is out, and etc. Okay, you need to do your homework. Now, Steve is asking about Fabiso. What do I mean? Okay, because I don't have a lot of time in explaining all this again. I will simplify it a bit. Like in life, right? High inflation means that everything is more expensive for us, right? Goods and services. So if you were buying a flower, because it's Women's Day, by the way, so guys, take at least a flower to your ladies, your mom, your sister, etc. So if a flower costs €1, $1, as long as inflation keep rising, that will cost us even more and more and more. This is the very first sign of a recession, by the way, of a crisis. The mechanism that the central banks have in order to fight, because you know, the higher the cost of living, that means that people will just pay for the necessities. They cannot save money in the bank accounts. Sometimes they cannot even save any money at all. They are breaking even, etc. So there is not a lot of cash flow into the market because even the companies, okay, companies, they will have higher costs than before. So that means less profit for them, the less revenue, and etc. So the economy is not moving smoothly as you should. So the central banks, in order to fight the high inflation, they are increasing the interest rates high. The interest rates. That's not good for our pockets either, but it's the only way to fight inflation, to bring it back to normal in order to get back and recover the economy, to recover, as the goods and services to get cheaper, and us to be able to have a lower cost of living, companies as well, etc. So once we say, dear Tabiso, that by the way, if any central bank is increasing rates, that means that that has a consequence. Its currency, so in this case, is Fed and the U.S. economy and the dollar. So every time that the central bank is increasing interest rates, its currency is appreciated, so it becomes expensive. That's more expensive. Sorry, there's not the word expensive. More expensive. That's why we've seen dollar increasing, because after Mr. Powell stated that, you know what, we will keep increasing rates. That means that people, even though they haven't really seen the interest rate increasing, actually, we're gonna see that on 22nd of March. They have already trading and investing on dollar on the anticipation that the Fed will increase rates and on the anticipation that the dollar will move up. Okay, so I need to get back to the analysis. So someone asked about dollar Aussie. So Aussie, basically Aussie. Okay, let's get to Aussie. I was one of the key movers, not only today, yesterday as well, because we had seen RBA increasing rates. It was as expected, though. The increase by 25%. So, but combination of the Fed and RBA is what it has caused this massive sell-off once again on Aussie. So strong dollar, weak Aussie. And look at this beauty. This is the daily chart, by the way, guys. So my dear Ivan, this is the daily chart. Nice floor, kept for nearly 2 months, more than 2 months, broken yesterday, even though it's something that we could have predicted if we're watching the momentum and everything. Broken a very, very big candle. So that means that it will stop falling or continue falling. Can anyone reply to me? Hi guys, hi, good afternoon. By the way, I've seen that some people are joining just now, so don't worry. As soon as I close the session, you can they can go back and see the recording anyway. So don't worry about it. Now we are on Aussie daily chart. Keep falling. Docker is saying keep falling. Okay, obviously we need a confirmation, but I agree with you, Dogra. Why? Look at this. This is a daily chart, okay? Daily chart. But look, no tail to the downside, massive big body candle. So guys, how big the body of the candle is, whether there is any tail below or above it, presents whether the bears are in control or whether the bulls are in control. In this case, it's clearly the bears. Look at that. There is no, so the bears have pushed as low as they could and they managed to win and close at the lowest territory. So that means that bears are in control. You might say, but Andrea, today it's slightly higher. That doesn't necessarily mean something. It might mean some consolidation, correction, locking some profits and etc. But the overall picture remains negative, remains to the downside. If I use also my channel, because there is a channel over here, see? Down, 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 correct a bit, down, 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 correct a bit, down, down, down. So if you have catch this massive full body candle back then, by the end of January, you could have had benefited all these decline. So another full body candle over here without no tail. Okay, so you need to add it on your monitor list. This is Aussie dollar. So if I put also my MACD, other than the fact that I have a full body candle, bearish candle, no tail, is just flirting with the year's first support. MACD is just keep falling and keep falling. You see, MACD is keep falling, falling. No indication for a recovery, just an increased bearish market. RSI at oversold territory. The big boy candle, the fact that it is in a downwards channel, all these just add to the to the medium and long-term scenario for Aussie to remain to the downside with the next, if it breaks today's bottom, 65, 63. So in the next few days or even weeks, we could see it falling down to even 0.64 floor. Okay, that's a bit in the long term. I mean, it might happen in a few days, might happen in a few weeks, but it's just for you to keep an eye on. Now, intraday, 4-hour chart, sideways, sideways, sideways as a correction, fell, small body candles, suggesting that there is not any steam to the upside, massive negatively configured MACD, again, negative. The next immediate support could be seen if you use your Fibonacci extensions. Okay, so if you're using Fibonacci extensions, no, okay, that's back to the 64. So I want to help other people that they are, there might be intraday traders. Okay, so not 64. I need to go to the 1-hour chart to find an immediate support area. This is the 1-hour chart. Let's see, guys. Sorry. Let's see. Okay, the next immediate support area for intraday traders is the 161 Fibonacci extension. So not 0.6543. Okay, this is 1 hour chart. I've spoke for the support. If our asset breaks today's support at 0.6563, then for those that are interested in a 4-hour chart or even daily chart and weekly chart, the key support level is the 0.64. I mean, the next, if today's breaks, the next that you need to keep an eye on is the 0.64. For those that they are intraday traders, an hourly chart, 30-minute chart, 4-minute chart, etc. If the asset, first of all, if we see the asset pulling back down, okay, breaking our 50 period moving average in this 30-minute chart, so that's somewhere around 0.6590. Then the very first support is on today's low, and if that breaks as well, then the next immediate support is another 20-25 pips lower, so that should be around 0.6543. Can we put Fibonacci on 15 minutes? Of course. But because you're on 15-minute chart V, you're in a very fast environment. You might consider using Fibonacci extension and on the latest swings. So you can obviously see that, right? Let me just fix it. I want it to be blue. Okay. And I want it to be as well. I want another one. I want to add so I want to add the 200 one, FE2000, and I want also the 261.8. I'm adding another 2 extra Fibonacci levels in order to give you more support and resistance levels. They are what's called V, because you want it in a very fast environment. So you see that on this latest, this is a 15 minutes chart Aussie, because V asked for a 15 minutes chart. So in this latest swing, okay, first of all, resistance is on this double, on this 66 level, 66.08. They retested it once, they retested it twice, 3 times. It's a round number as well. It's just a breath above the 66 territory. So it's our resistance area. If it breaks, we might see another attempt to the upside, to the previous high, which is at 66.28. I think this is clear, V. Yeah, South America. Welcome, Axel. Now, on the flip side, I have already seen my asset over here reverting some gains. So 1, 2, 3, 4 sessions to the downside, flirting over here with my 50 period moving average and the previous bottom that we have seen over here, which also coincides with the 100 Fibonacci extension, right? Now, if this 15 minutes candle close at 100 Fibonacci extension or even slightly below it, then your next support level TRV will be at the next Fibonacci extension. So that should be not 65.90 and 65.93 and 65.89. So you see, it's also that could be proof because it used to be a nice support level as well. Look at that. So it makes sense because it's also coincides with the previous lows. A new high, that means it will go down, a new high. Sorry, new low. Yes, but you need to wait for this candle to close, my dear friend, okay? This latest candle to close to see will be held above 100 or, oh, it just closed, but there's a big tail. and it closed on there. So there is not, you need to wait. You see, it closed above 100 Fibonacci exception, above 50 period moving average. So we need to be a bit patient, okay, until it triggers a potential entry. Mark in RSA. I'm not sure that I get that, Mark. What about entry using Fibonacci retracement there? Just triggers your entry. It's just clear as that. I don't get it. Can you let me know? Oh, you're in South Africa. By the way, we have an office there. You should join our market analyst over there, Fence. It could help you, Mark. I don't know whether you already met Offense or not. I'm waiting for your clarification, Dogra. Let me see other questions. Yeah, Mark, he's brilliant. He will be able to help you if you can join him in our office as well for a face-to-face meeting. And guys, because I've seen a lot of people might be from you might be in South Africa. You can actually walk in our offices, book actually a session with our market analyst, and he will be able to help you guys with anything you might need. Okay. What do you mean refuse to? You couldn't register? You mean, dear Cliff? What did you face? What do you mean? What was wrong about the registration system? Can you send us a message? I mean, like a private one on the Facebook page, in the message, in the messenger, HFM messenger, just to investigate further why you couldn't register. Okay. Okay, V, in regards to the moving averages, you need to have, for every time frame, you need to have an appropriate moving average. Okay. For example, if I'm using a 20 simple moving average and in a daily chart, and I can see that it satisfies my asset. And actually, let me just change it to exponential just to have a look. That might be an even better one. It doesn't mean that I can use the same one in the 15 minutes chart. No, you need to play a bit with it. First of all, stick to a particular time frame, the one that you prefer, and amend or use different moving average just to make sure which ones, because there might be two, which ones are more appropriate for your asset for the time frame that you have chosen. Okay. Not every time 50 moving crosses. Yes, it doesn't every time. It doesn't mean that the moving average will always cross the Fibonacci level. No. What you need to keep an eye on is whether your price has crossed above or below your moving average. Fibonacci is an extra tool in order to either give you more confidence for your decision, to just to make sure that you are on you're taking the correct trading decision, and to also help you find out the next support levels if the asset is moving lower, or resistance levels if the price is moving higher. Okay. So sterling. cable. I'm going to start with the daily chart because we had seen yesterday this massive sell-off. We have seen, other than the fact there's a full body candle, massive body candle breaking 2 months support, 3 months support. No, actually, yeah, 2 months support, January's and February's. Triple breaking my triple down fractal. Also, it goes below the 200-day moving average. You see that? And it's not only that. Let me just, if I connect the latest three fractals, these three fractals that I had, so connecting the highs, right? Connecting the highs. This is daily chart cable. Connecting the latest, this triple fractal, I could see that is in a descending triangle. So how many warning signals we have over here for cable? We had a breakdown of descent of 2 months descending of a month, February's descending triangle, move below 200-day moving average, move outside Bollinger's, break out of triple lower fractal, and a really further extension of bearish momentum in MACD. So this is adding to the, is turning, has turned the cable from a neutral outlook in the medium and long term into a bearish one. However, can you see the reason why I zoom out is because I want to show you that it's still holding above the this 5 months support at 118 territory. So the 118 round number and support that has been held since November, just to be precise, should be 17775, 17775. This will be, if that is broken, that will be the final sign that we're gonna have that the cable might have exit this range in market and started and turn to the downside, with the eyes turning to the bottoms that we have seen back in September. Okay, everything agrees. MACD extending lower, so increasing negative bias. RSI the same. As I said, breakout of descending triangle, move below moving averages, the 200 moving average more precise. The asset is outside Bollinger's. So we might see, because it's outside Bollinger's and that means oversold territory, that means it's oversold, we might see some correction, sideways movement until it gets back to the Bollinger's. But you need to keep an eye on 118 territory and 117.75 because this could just be the confirmation for a new long downtrend. Now, intraday, we'll just get rid of this. Okay. Okay, guys. To the upside, the 119.20, this triple fractal, the bottom of the triangle, etc., now has turned, has become our immediate resistance level. Obviously, the asset is well below it. Okay, there's no indication that it's moving towards this resistance. It's just sideways. Very weak body candles. MACD is extremely. I mean, it's just presenting a very an increasing bearish bias, like a lot of selling. RSI the same, MACD the same. Sorry. So just to have, and just what we want to see in order to suggest that the downtrend has resumed is a break, as I said, of 118 level. Okay, 118, round number, immediate support level. Okay, so if that something like that happens today, then the next, I need to zoom in and get back to the daily chart to find our next support levels. Next support levels 116.44. So I'm just using my latest fractals to find out immediate supports. 115. Okay, for intraday traders, scalpers, etc. Let me just zoom in a bit. You can use ATR, you can use Fibonacci extension, and so on and so forth. So let's do an example. So after this massive sell-off, and for my dear friends, okay, once again, you see 161, 161 Fibonacci extension is indeed what I told you earlier. It comes in line with the latest upfractal in the daily chart. But for you guys that are trading intraday, we need an immediate support levels. So in this case, let me use ATR. So I'll go down to the 1 hour chart. Okay, and I'm gonna use my ATR because it's like a free fall over here. So ATR suggests for the next hour just 15 points movement. So ATR can help you as soon as the asset turns below 118, can help you set the new target level based on the ATR. But for the timing, we have a lot of dodginess, a lot of consolidation. So your eyes should just turn on the 118 level, and to the upside, 119.20. Just to remind you that we might see ahead of Mr. Powell, the bulls trying to, or the bears trying to push the price higher just to sell on a higher level. So that is not something bizarre. That happens. Okay, that happens. So you might, if you at some point start seeing cable moving higher and higher, sometimes this happens before the news. Sometimes we're seeing that the market participants are trying to push the price higher in order to sell it at a higher level. So that's why 119.20 is key, because if indeed it breaches that level, and if it fails to break it, then we might see a diving at that level. Okay. If you disagree with me, that's fine. By the way, I would really like to hear your opinion, guys. Someone asked about pound yen and I forgot about it. Sorry, I'm back to you. V, you keep asking about 15 minutes chart. Usually, if it's this kind of environment, really fast one, okay. Let me just, you can try 5 and 9 exponential moving average along with 20 exponential moving average. So this combo 5, 9, 20 exponential moving average. But you need to test it. You need to check. Does it indeed give me a nice signals for my 15 minutes chart in yen? You need to test it before actually use it, because it doesn't mean that it will be okay for your asset. You need to test it. If it doesn't give you a nice results, then you need to amend it. Maybe there needs to be a higher moving average, not exponential. Maybe a simple one. Doesn't satisfy the asset an exponential moving average. You need to test it to make sure that it gives you correct signals. What I mean by correct signals? So, for example, in this dollar yen 15 minutes chart, the 5 and 9 were just fine because the crossing over here, the clash over here, indeed indicated that we might see further selling, and indeed this happened. The Again, the crossing bearish crossing of 5 below 9 again here. Indeed confirm 1, 2, 3, 4, 5 more negative candles. So you need to test. Now, who asked about... Okay. Mathidiso, please, I don't know who is your agent. Can you let him know to arrange a meeting with Stuart or myself and Offense as well? And if you are in Johannesburg and wait, it's just and if you're in Johannesburg, please book a session with Offense and go there and see what you're doing wrong. Offense will help you to see what you're doing wrong. Okay? Blowing your account all the time is not trading, it's just gambling. We're not doing this job in order to just lose money. We're doing this job because we want to save more money, to increase our profits, etc. Okay, so please book a session. What I wanted to say, we were in dollar yen, yes, dollar yen, and I missed one more question about gold. Yes, I haven't forget, Michael. Gold, yen. Okay, let's finish with yen, and I will quickly turn to gold. And there was a lot of discussion over here about gold, and I think I've missed it. Dollar yen, dollar yen. Dollar yen, it was Michael again. Okay, dollar yen. Let me clear a bit this mess. So, I don't want the thing. Okay. So a bit of a muted trading so far in dollar yen. The asset is really close to the open price, at the round 137 level, posted a new high, so that presents a further a continuation of the uptrend that we have seen in the beginning of February. Okay, but there is a bit of a, it seems the indicators are presenting a bit of a consolidation. So my 50 and 200 moving average have clashed. That's a good sign because I have added it in my monitor list because I want to see in the next few days whether we have a golden cross, the 50 above the 200. Because if we have a golden cross, that means that the dollar yen could continue moving higher and possibly retest 140, 141, 142, 143, etc. So keep an eye on the golden cross, on the potential golden cross over here. Okay. MACD clash, so it's at the same territory, the same clash flattened with its histogram. RSI also flattened, so this, along with this muted trading today and the flat moving average, suggests that we might see a bit of a consolidation. So for the daily chart, it doesn't look so interesting for the time being. Okay, for the time being. So 137 is your support level. 137.90 is your resistance level. And break above 137.90 could open the doors to the the previous fractal, 140. The previous fractal, 142. These are the next resistance area if and only if we see the asset moving today above 137.90 and closing above it as well in the end of the session. Okay, so on the flip side, we're seeing pulling back to 137, then attention will turn to this double fractal and the 135.37, but this is not so likely because MACD is still, even MACD and RSI, even though they stalled a bit, they flattened, they're still positive. There is no indication that they were going to have any pullback. We need to keep an eye on whether we're going to see 137.90 breaking and the asset closing above it, because that could trigger 140 and 142 level. Intraday now, let me go back to the 1 hour chart. The asset peaked at 137.90 and then it pulled back to 137.25. Next support remains the low of the day, which is around 137 level. Now, my dear 1 hour chart traders, 15 minutes chart traders, 30 minutes chart traders, look at that. So the asset is in a pullback, already below the 23.6 Fibonacci level. Next important level to be seen intraday, so today, is the 137, as I said. However, we have already seen the moving average posting a bearish cross just now, just an hour ago. Bearish cross of 5 below 9, already below the 20 period moving average and the 23.6 Fibonacci level. Stochastic over here, sorry, stochastic over here, pointing to the oversold territory, and there is further steam to the downside. So that indicates that it could retest this 137 level. If it breaks it, not only retest it, it moves even below it, that could take the asset as low as 136.50, 136.40. Okay? Gold. Please explain how NFP affects the market. If NFP once again comes massive, undershoots expectations, comes more than expected, so we have more jobs than expected, that means that the labor market in the US is still tight. So that adds to the scenario of more aggressive tightening for the Fed. And that, my dear friend, could help dollar moving higher, stocks falling further, bonds falling further, yields rising, gold under pressure, and so on and so forth. But guys, attention. NFP is one of the most volatile assets, volatile events of the month. We always say that wait for the market to count down and to the NFP effect to finish, the market to settle, and then take any decision on any or open any positions. Okay, you might be you might want to trade the news, but be very, very careful because NFP is the most volatile of all. So even if you might have take the correct decision, because it's so volatile, it might kick your stop loss. So it needs a very, very you need to do your appropriate risk management, set your stop loss and your target at appropriate levels in order not to be stopped out in order to stop out. Okay, so okay, I'm not saying you need to put your stop loss like far away and at the end have a massive losses, but just do your technical analysis and set your stop loss at an appropriate level, okay? If you want to trade the news. Otherwise, you can wait until the data are out to see how it affected the market and then take any decision to enter. So let's finish with gold, which resumed its downtrend, but is still above the 200-day moving average. Okay, still holding that support that we have seen last week. Okay, so the last week's floor, actually 2 months floor, which was also retested last week, sides with the daily lower Bollinger Band level and the 200-day moving average. So we have this that floor on gold, which is the 1800s territory as well, so a key psychological level. But have in mind that um, fundamentals are 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 adding pressure to the gold. So I saw some people. Where is it? Where is it? Where is it? Okay, so let's get to
Hi
the.
everyone, I'm sorry we're late
Okay.
today, but we've had some technical problems. We get into more in depth
Give me 5 minutes, guys.
on
Okay.
Can you
So,
see my
guys,
screen?
also Stuart is live for the
Here
African
as
classes.
well.
By the way, people that are in any country in Africa can join if you want to join him. I will quickly state some support and resistance levels for you for gold, and I will close the session so Stuart could continue with its webinar. So, guys, all the eyes are on 1800 territory. You can tell me that I need something quickly today. Keep an eye on the highs and the lows of the day, okay? It has entered consolidation mode. Okay, you see that because the volume just have flattened. So be patient, wait for the data to get out in order the gold to move and to see either a breakdown of 1800s, which is this is the most likely scenario consider the fundamentals, or if something else happened, don't know, we need to keep an eye on the headlines. If any surprise happens, we might see recovery with the next immediate support level at 1825. But for gold to in order to believe that gold is back to the upside, we need to see gold above 1830. Okay, sorry for that. I need to call it a date because there was a technical problem from Stuart and his webinar, so that's why he's doing it right now next to me, and you can hear both of us, and that might be very, very confusing. So, gold, keep an eye on 1800s. If it fails, then we might see it in a free fall down to 1750 and 1700 territory. A move, only a move above 1830 could suggest that gold could return to 1860 territory. And now in the golden crossing 1 hour chart, you mentioned dear Nisha. No, I cannot see that. No, that I cannot see that. Oh, you mean that one?
Please let me know.
Yes, you're right about that one. You're right about that one. That's not the golden cross. It's a death cross. Death cross. I don't remember the name, but it suggests that in the near future we're gonna see more sell-off, more selling pressure. Okay. In regards to dollar yen, my dear listen and see, as we said, dollar is the biggest gainer so far, and that could remain the case. Keep an eye 137. There is a cross of bearish cross of 5 below 9 exponential moving average in the 1 hour chart, so that along with the stochastic that is pointing lower suggests that there is in the next few hours, in the next few minutes, we're gonna see further decline for dollar yen. So 137 remains the next support level, and the very next one, if 137 breaks, it will be the 136.70. Okay, so negative outlook intraday for dollar yen. However, in the daily chart, we have a quite strong dollar yen. So that means that this pullback intraday is temporary. Okay, this pullback intraday is temporary until we have the data out, and that's why you might see, guys, a rebound on 31.37. Okay, so be careful with dollar yen. This is just a correction. This seems to be a correction in our long-term uptrend. So we might see a rebound at 137. If it breaks 137, we might see a rebound on 136.70. Okay, keep an eye. It's not a bit funny. Stuart next to me also doing a webinar, so I need to quit the session, guys. Sorry. Okay, hopefully I help you anyway. This is recorded. Go to our YouTube channel or Facebook channel, and the video will be there, and you can watch it from the beginning. Okay, thank you very much. Bye bye. How we as humans react to the news and how we deal with it.